Narendra Solanki also joining us. He's from Anand Rathi Shares and Stockbrokers. Narendra, great having you. We're just chatting about textiles. Also, Rajesh Palviya joining us. Good having you here, Rajesh. Let me start with Narendra first. Narendra, we're just chatting textiles. How do you look at the sector as a whole? Is this turnaround of sorts more structural in your opinion?
Yeah, definitely. I think the sector is looking shaping up a good momentum, and also if you look fundamentally, the kind of trade deals we already have, especially the UK trade deals. So those trade deals are adding to the tailwinds of the sector, and the cost inflation is also largely has already run through the sector, and I think the volume should pick up going ahead in next 2 to 3 quarters, and especially we would be seeing good traction building up on the earnings front. And coming to the textiles, we are also positive on man-made fiber and technical textile kind of space also, as well, wherein we are seeing a lot of technological upgradation happening, and the use cases using defense and using infrastructure projects are rising. So from that point onwards, also we are very positive on picking up volumes, especially in both these segments.
Let me also quickly quiz Rajesh. Rajesh, one quick question with regard to the index. What's the call now?
So some recovery is taking place, Harsh, and looking at the recovery still towards the end of this expiry, I think Nifty is likely to consolidate around the major call concentration area, which is placed at around 24,250 to 24,300 zone. So which is very immediate resistance based on the call concentration area. If at all ahead of monthly expiry, if Nifty able to take out 24,300, then we could see, some short covering action to play out towards the expiry. But looking at the data setup, we believe that, maybe we could remain in the range only on the downside. 24, 100, 150 are the support area, and 24, 300 is the resistance area. So maybe we could remain in this range for next couple of days. Bank Nifty is attempting to, penetrate, major supply zone, which is at 57,700, 800 zone. If at all Bank Nifty crosses 57,800, I think here we may see some short covering action, as some of the private sector large cap bank have shown some buying action from the lower level, and that has helped the Bank Nifty to, negotiate with its resistance area. So any breakout above 57,800 can take Bank Nifty further higher to 58,200, 300 zone. At this juncture, one needs to trail stop loss around 57,300 to hold the long position.
Okay, those are the levels you look out for, and that's Rajesh's view on the Nifty. I need to slip into a very short break, come back, plenty to speak about. There's Narendra, there's Rajesh, there's Kunal. We'll chat more on the market on the other side. Stay with us. Welcome back, and we're in conversation with Narendra Solanki, Rajesh Palviya, as well as Kunal Bothra. Rajesh, let me come straight to you. Try and get a sense, what are the sectors that you're looking out for in terms of what could be the outperformers in the coming week?
So I think it's a expiry week for August series, and I think looking at the overall month performance, I think auto would be a one sector where one can focus on. Here we may see, some more upward momentum towards the end of this month. So for next week, I think automobile is one sector where we are focusing, and from that space, Hyundai Motor is looking attractive, and we are projecting target of 2300, 2350 on the downside. 2150 needs to keep as a stop loss. From the two-wheeler space, I think one can focus on Hero Motor. Here also we could see some upward momentum towards 5850. On the downside, 5600 needs to keep as a stop loss. So automobile is looking promising, and new age companies are also showing sign of strength. And I think from here, Eternal could be a one stock where one can focus on, and we believe that this stock can extend gain. 340, 345 would be the upward target in the continuation of this up move. On the downside, 316 needs to keep as a stop loss. And some of the pockets where we have seen, accumulation activity throughout the month, and the sector which could outperform in the coming month would be capital goods space. And I think from that space, some of the stocks where one can focus on stock like BL, Kaynes Technology, Hale, these all stocks one can focus on. And I think here there could be a chance that, we may see a good up move in the coming series. So capital goods is one space where we are focusing on for upcoming series.
Industrials, positive on industrials. IT, Rajesh, that's been the top laggard this week, nearly 3% on the index itself this week in terms of a move. We've seen a rapid move on the index in the month of July. August hasn't been as kind to IT. What next?
So Nifty IT, we have seen, yes, good run up, but large cap IT stocks are still struggling to cross their major supply zone on the near term, short term chart. Nifty IT index itself, not able to take out 32,000 level. So that was the major challenging level on the higher side. So until that breakout not takes place, I think Nifty IT index may remain in the range only. But from IT space, I think some of the mid-cap IT stocks are still doing good, and I think one can focus on mid-cap IT stocks like Coforge. Here we may see some more, upward momentum and possible rally towards 1950 to 2000. We could see in the continuation of this up move. So Coforge is one stock where we are focusing, and one can buy and accumulate. I think another stock from that space would be from the mid-cap IT space, and I think on the lower side, some accumulation activity has been visible in Tata Elxsi also, and stock is trying to negotiate with its 50-day moving average. So any breakout above 3750, 3800 can take this stock further higher. So one can focus on this stock also with stop loss of 3620.
Top picks, top bets, Rajesh. What is it that you're looking at in terms of stock specific bets?
So I think at this juncture, Kaynes Technology is looking promising. Kaynes Technology managed to give breakout on the near-term, short-term chart, and we are expecting target of 4,100 to 4,200. On the downside, 3,800 needs to keep as a stop loss. Another stock that we are focusing on the automobile space, that is Eicher Motor, almost consolidating near to its all-time high trajectory. And we believe that, once stock able to take out above 8,050 mark, here there is a possibility of another 200, 300 point rally. So we are projecting target of 8,300 to 400 for Eicher Motor. On the downside, 7,870 needs to keep as a stop loss.
Rajesh, thank you so much for coming in and giving us that perspective. We'll let you go. Thank you. Okay.
Thank you.
Narendra, just very quickly, trying to get a sense, EMS as a pack has come back into focus because of the scheme which the government has put out and the approvals that have come recently. How are you looking at the space as a whole? And we've seen a very strong run up. Say a Dixon Tech was not too many months ago at 10,000, currently sitting around between 13 and 14,000 a piece. How are you looking at the entire pack and your favorites from within that pack?
Yeah, definitely. EMS has been a very good long-term theme, and we are still positive on this theme. However, in the short term, because of geopolitical volatility, there may be some supply chain issues which may increase some raw material costs, etc. But if you are really looking out for a long-term return, then I think 3 to 5 years is the kind of timeline which one should be focusing on rather than driving very short timeline. Now, coming to the stocks, so Keynes again is one of our favorite. Plus, Dixon is another stock which we are very positive on, and the CG Power, another space wherein it is building ASAT capabilities. So these are the three stocks which we like in this space.
All right. Any favorites for you, Kunal, from within the EMS pack?
See, I think Keynes is something which starts to look now a little better because the stock which was earlier very volatile is now trying to make a third or the fourth attempt towards break out the 3,900 mark. Today, I think the stock so far has managed to successfully scale above those levels. But this is something which looks attractive. Dixon Tech, Sirma SGS, etc. These stocks have done very well for themselves over the last 2 months or so. Sirma SGS had come back towards lifetime high levels. Dixon Tech, I think, had come back recently towards the 200-day moving average breakout. So both these stocks have done reasonably well. Difficult to give a buy at the current levels because of the recent price uptrend. But I think in terms of a fresh breakout, if I have to peg, then I would look at Kaynes Technology.
Okay, Kaynes Tech, that's the one. I think both Rajesh as well as Kunal liking that one on charts. The stock has seen a very decent rally. If we can pull up the 1-week chart on the stock, that will also give us a sense as to how it's played out this week. I think it's done very well this week for itself. There you go. That's the 1-week chart. Okay, 4% move on the 1-week chart as well. But from the lows of the week, we've recovered very, very well for ourselves. Okay, so that's on Kaynes. What we'll do is slip into a break, come back, plenty to speak about. We'll also start getting those reference rates which we get at 315, indicative closing of sorts. We'll start speaking about that as well, and we'll start closing down. Another half hour to go, by the way, so we'll play that half hour as it comes. Stay with us here on ET Now. Welcome back, and we're talking markets with Kunal and Narendra. Narendra, if I were to pick your mind with regard to how you're seeing the sugar story unfold, that's one of the stories that has unfolded through this week. Lots of ups and downs. How are you looking at it now? Narendra, I believe you're on mute.
Yeah, I think I'm here.
Yes.
Can you hear me?
Yes. Now I can.
Yeah, I think the rally has been very sharp in the stocks, and yesterday we have seen a very sharp run up in the stocks. However, having said that, if you see global demand and supply situation and the domestic trends, so right now the stocks which used to remain in upwards of 50,000 number is now hovering at around 43,000 kind of number, and which is a very alarming level, and hence the government has allowed the import of sugar. So this should keep a tab on rising prices. And it being sugar a very cyclical sector, and lot of intervention is there from the government side. So we can continue to see more remedial measures from the government in order to check the prices. So from that point of view, I think the volatility would be much higher going ahead in the space, and most part of the rally, or you can say the improvement in the realizations for these companies have been factored in by the markets on part of both the sugar as well as ethanol story.
Okay, Narendra, what is it that's standing out for you in a market like this? What are you recommending for your clients?
See, right now, nothing much shift in our stance from a quarter or so. So we continue to remain positive on auto ancillaries as a space, and following up with defense space. However, valuations are not very cheap in the defense space. But as and when markets gives us an opportunity, we continue to chip in a few stocks in the defense space like Bharat Electronics, HAL, Solar Industries kind of stocks. Now, especially in near term for next 2 or 3 months, as we are going to see start of festival season. I think durables is a space which can be looked at from that perspective, consumer as well as durables, as we are entering into the festival seasons. Apart from this, metals is another space, especially non-ferrous metals, stocks like Hindustan Copper kind of stocks, wherein we are very positive, and we should continue to see improvements both in terms of profitability as well as volume growth for the next 2 to 3 years. Also, the international supply and demand scenario is favorable for the copper space. So these are the sectors we are positive, and apart from this, financials, especially NBFC companies, we are very positive, and the gold financing companies are the ones which we again can see some run up in near medium term.
Okay, just give us a sense, Narendra, very quickly. Actually, I'll take a bit of a pause. Sneh is in fact standing by. The Nifty FMCG stocks, they're under pressure as palm oil prices have hit a 20-month high, crossing the 5,000 ringgit a ton mark for the first time in this cycle. Higher palm oil costs could obviously pressure margins for companies like GCPL and HUL, Bikaji, among others. And Snehi here to break this down for us.
Well, yeah, so the Nifty FMCG index is under pressure and continues to be the top losing index in terms of sectoral moves today. The trigger is that palm oil prices have risen to a 20-month high and they've surpassed the 5,000 ringgit. That's the Malaysian ringgit per ton level. Palm oil prices are now at 5,119 Malaysian ringgits per ton. And the Malaysian Palm Oil Council says that palm oil prices are expected to stay sticky at least above the 4,600 Malaysian ringgit per ton going ahead, especially in September. The reasons behind this is tightening supply, rising Indian demand, as well as favorable biodiesel economics, where a lot of palm oil is being diverted to in Malaysia. So if I take a look at the palm oil moves on a month-to-date, 1 month, 3 month basis, the moves are anywhere between 8 to 9.5%. That's the kind of spike we've seen recently in palm oil prices. In terms of Malaysia's palm oil production, expected to peak in September and October, but the production could then dip on a year-on-year basis over the remainder of Q4 of calendar year 26, and then supply could start tightening towards the end of it. The other big reason is India's shift from vegetable oil to palm oil right now because of all the geopolitical disturbances we are seeing. There is a shifting demand from vegetable oil now towards Indian palm oil, and India's July edible oil import, it is at a 10-month high. So we're already under pressure because of rise in prices, and our exports are also going up. According to Solvent Extractors Association of India, palm oil has been the highest in 5 months in the month of July, the kind of imports that we have done. Lastly, let's also talk about how FMCG stands to be affected and the Indian company's dependence on palm oil. HUL uses palm oil and its derivatives for personal care and home care products, and then palm oil makes up 15 to 20% of HUL's raw material cost. For GCPL, 30 to 35% because they are a major soap player, and palm fatty acid distillate is used to make soaps. Dabur, Britannia, Nestle, Bikaji, all of them continue to be under pressure because palm oil makes up as high as 50% of Bikaji's raw material cost. For Dabur, Britannia, Nestle, it lies between 10 to 15%. So that's the reason why FMCG stocks and the entire index is under pressure today.
Okay, thank you so much for that, Snehi. That gives us a good picture of what's playing out. If I can switch back to you, Narendra, with regard to Hindustan Copper, trades at around 47 times. Of course, copper prices have held up beautifully, and my guess is that they will continue to do so, is what you are building in. But what's the risk here to the thesis? And of course, the expansion plans also are solid. Did you believe that executable?
Yes, definitely. See, there are 2, 3 kinds of tailwinds which is going positive for the stock. One is, of course, the expansion plans, aggressive expansion plan, wherein the company is targeting to double its capacity by 2030. And the second is, if you see the overall inventory in the LME and as well as SHFE, that has squeezed further, and that has added to the already weak supply. So the prices are firmer, and there are expectations that further price hike may come in. Also, if you see the global shift towards renewables as well as so there is a very high demand which is expected to go for the copper, especially the data centers, and there has been a very strong demand coming up from these kind of new spaces which is coming up. So from both one side, the supply is coming down and inventories are coming down, and on the other side, the demand is continuously increasing for the consumption of the copper. And with the addition of the new capacity, and new capacity is coming just in time for the company, would further add to the tailwinds of the company. Hence, we continue to see a good traction for the company, both in terms of revenue as well as profitability.
Okay, that's interesting. From the metals pack, Kunal, would Hindustan Copper feature?
Yeah, it's done reasonably well. I think there was a point where Hindustan Copper did exceptionally well start of 2026, and then on the back of correction in the commodity-based asset classes, silver, gold, copper, etc. In the past, for 4-5 months, these stocks had also gone through like a 15%, 20% correction. Hindustan Copper, I think, had recently come back towards 530, 540 mark, and now it's coming back again towards its swing up move. So chart pattern wise, it looks attractive on the short term bet, but then you'll have to always keep an eye on what's happening on the base asset classes and whether the trend over there sustains to be on the upside.
Okay. Now, we spoke about EMS briefly, and exclusive sources are telling your channel that the government is preparing to widen the scope of its ECMS, which is the Electronic Component Manufacturing Scheme, with more components likely to be brought under the incentive framework. The Ministry of Electronics and Information Technology, or MeitY, held discussions with industry players including Kaynes, Amber, Syrma and Samsung last week to identify additional modules and components that could be included. Sumita here with the details.
That's right. In fact, exclusive sources have told ET now that there could be a possibility of the government likely looking to expand the scope of the electronics components manufacturing scheme. And this is essentially aimed at covering more components under the scheme. And in fact, in this regard, we're given to understand from sources that the IT ministry and representatives from the IT ministry had discussions with the industry a couple of days back, and industry players included representation from Kaynes, Amber and Syrma, amongst other companies. And in fact, they held discussions with government. These discussions focused on identifying additional modules and components that could be added to the scheme. So in terms of the components that were discussed, well, battery management systems, PCB drill bits, CCTV enclosures and materials could be some of the components that, that of course were part of the discussions that the industry is seeking to get included. In fact, the industry is also seeking a longer gestation period for PCBs, citing extended production cycles. In fact, what sources have also told us that the scheme could be reopened to invite fresh applications for these additional components. And with regard to that, the government may issue an addendum to expand the scope of the scheme. Remember, in July 2026, an addendum for optical transceivers was notified. Now, as far as the ECMS is concerned, or the Electronics Components Manufacturing Scheme is concerned, well, it was notified in April 2025 with the 22,919 crores of financial outlay, which was later expanded to 40,000 crores in the union budget to accommodate the massive industry response. In fact, there is room to accommodate more companies and bring in additional components under the scheme, under the expanded scope of the budget. As of now, at least 106 applications covering 30 products across 15 states have been approved.
Okay, thank you so much for that, Sumita. Very interesting, and plenty playing out over there. And we'll continue to talk to managements to give you a better perspective of what's happening. But Narendra, coming straight back to you, the big debate at this point of time is, should you go out and buy large cap private sector banks? And if so, how should you play it? One, if you're initiating a fresh long, is this something that you'd be positive on from a 12 to 24-month perspective?
I think overall we are positive on banking sector. If you see on an average, the credit growth has been very good, consecutive. Last month it was 17. This previous month it was 18. So this has been a very good number. However, in terms of private banks view, we are not very positive, especially in the very short term, because the banks are lagging behind their PSU counterparts. Having said that, in other side, we do not see any major downside as well. So there is no there is very minimal downside risk. However, a very sharp rally or re-rating happening for private banks immediately in a month or so is very unlikely. However, we are into a consolidation phase, and we definitely see a positive things improving for the private sector banks in a quarter or two onwards right now. So nothing immediately positive, but yeah, we are on a trajectory of improvement, seeing in the private sector banks, and we like ICICI Bank in the private sector space right now.
Okay. Then would you therefore play through some of the smaller banks, and what are your favorites within the pack?
The large caps, ICICI is one of our top picks, and apart from ICICI, we have SBI and the PSU pack. So we would like to play a mix of both private as well as PSU plays, wherein ICICI would be our top pick from private banks, and SBI, Bank of India, Indian Bank would kind of names would be our top picks from the PSU pack.
Okay. And Narendra, also curious to know, how should one look at consumption at this point of time? Snehi was just giving us that update with regard to palm oil prices. Would you be worried?
We have to see. Definitely, what we have seen is that a few quarters back, the raw material costs have impacted the margins of the company. And following the GST 2 implementations, the company has taken a price hikes. And we have seen that the demand has been steady and gradually picking up. So most of the price hikes have been taken up by the company. And now another spurt of raw material inflation would definitely add to the headwinds and eat up the margins of the company if it remains sticky. Having said that, I think from the volume perspective, we are on a positive path. And since we are just entering into the festive season a fortnight later, so I think the volume growth the momentum should be maintained, and we have to keep a watch on how the raw material cost inflation is going to impact, and especially is it just a short-term phenomenon or it continues to stay. So definitely if the palm oil prices remains high for a longer period, so it has a potential to impact the margins of the company.
Okay, all right. Let's also quickly pull up some of those stocks, see whether there's an impact. 30 seconds to close the cash market, at least in trade today. We're absolutely flat on the Nifty. No real moves seen. The cash trading session also not seeing any significant move, at least at a net level. So you're largely seeing a flattish kind of move. Well, Grasim is down 1% in the cash segment. Last 15 odd minutes is what we've seen that in terms of the move. Nestle down around 4/10, HDFC Bank down around a third. So those are some of your movers over the last 15 minutes or thereabouts. SBI, that one's down. That one's up 0.75% over the last 15 odd minutes. So you're seeing some good strength build up over there. In fact, stock turning green as a result of that. Some of the big gainers of the week, I also want to quickly flag those out because we've closed the week as well. And HDFC Life is your top gainer, 3.5% move on HDFC Life, Eternal up 3% as well. Kotak Bank, Power Grid are just some of your other gainers in trade, for the week gone by. Kunal, I wonder from within the private banks, is Kotak Mahindra Bank staging a bit of a comeback? Last few days I've seen that there's been some good moves coming on that stock. Trying to understand whether that can sustain.
Yeah, I think, Harsh, we remember, I think a couple of days back I mentioned that the private sector banking stocks, few selective ones like Kotak and Axis Bank, they are the ones which are looking attractive, specifically on the back of, two reasons. One, that the indicators were deeply oversold for the stock prices and that the stocks had tapped back into a strong support territory. I think around 385.90 approximately. From there, Kotak Bank has moved on to that 400, 405 mark. I think today's high was around 405 odd levels for the stock price. It's cooled off from the intraday highs. The candlestick pattern is not attractive today. For example, what's formed for Kotak Bank on closing basis, we call this as more of a doji pattern, and this could probably indicate that maybe I think for the next couple of days the stock might see slight bit of a cool off over here. But I think as a process, what we are seeing is that many of these private sector banking names are tapping back into their strong support territories and then seeing that odd 5%, 7% swing. So it's always better to try and wait for these stocks to come back into that support territory where the risk reward also originates to be a lot more positive.
Okay. And Kunal, anything that stands out for you in terms of the moves on the gas last 15 odd minutes? I'm not seeing too many strong moves, even though there has been some bit of a uptick that we are seeing, and there is some bit of choppiness as well. But your take?
Yeah, I think, for example, Crompton has done decently well. It's shown that slight bit of an uptick in terms of cash. Bank of Baroda, I think, has shown that slight bit of an uptick, so far what I can see on the charts, in terms of closing. So few odd, very odd kind of names. It doesn't emerge as like a theme which is playing out. I think what's going to be very, very important is day after tomorrow, which is Tuesday, because it's going to be the first expiry on the basis of cash. And we all know that expiry the last half an hour is very, very crucial for the markets because a lot of positions get closed, rollover, etc. They generally tend to happen. So I think the Tuesday is going to be more important than the odd days.
Okay. Narendra, if I were to ask you for some ideas, some stock ideas, I know you're not doing much, at least when I asked you on sectors. You said that it's all status quo, but any stock ideas that you have?
Right now, in textile sector, we are looking at, and it's look interesting. So, Gokaldas Exports is one of the stock which can be looked at, especially the company could benefit from the UK FTA, which has been, which is going to be implemented this year. And apart from this, as I said, Hindustan Copper is another idea which we are looking forward to, and we are Scientific is another idea. This is into a CDMO player, and it has tied up with 15 products with the companies like Pfizer and GSK. So which is coming up in next few quarters. So we see good amount of revenue growth as well as EBITDA growth happening for VR. So these are the top three stock ideas for next medium term.
All right. Also curious to know what the view, Narendra, on some of the big buzzers of the day is. Welspun Corp was one of those big buzzers, and management commentary also coming through that they are in talks for more orders. Of course, yet not converted. What's the take there? And this 14% kind of move, how much does it build in?
Right now, Welspun Corp is not under our coverage and do not have
Okay.
any active recommendation. Yeah.
Understood. Anything from within the renewables pack that you're focusing on, Narendra, at this point?
See, renewables, we continue to like Waaree and Premier Energies, and however, we are into a consolidation mode, and the ASM stage two, which is the policy is which has just shifting. So we are into that shift phase, wherein the companies which are more backward as well as forward integrated would continue to be relevant companies, and the companies which are just into the assembly of the modules would be seeing pressure in their margins going ahead. So these are the two plays which we are playing, and in renewables, Waaree and Premier are our top picks.
Okay. And, what about some of the platform companies, Narendra? What's the view there? Eternal, Swiggy, Urban Company, and the like?
Yeah, Eternal definitely we continue to remain positive, and especially from the LinkedIn point of view, we continue to see the momentum to be maintained in the growth, and we continue to we are very positive on the Eternal as a overall business.
What about some of the names from the broader end? A car trade, an urban company, a Paytm not so much broader, but a Meesho, for example. Any of those names that you track, and even if you can give us a sense on one of those as to how you're seeing the journey.
See, we are closely monitoring the space. However, Urban Company and Car Trade Tech both are not under our active recommendation list. But we are very positive on the overall new age tech stocks, and we are very closely monitoring the space. And overall, the space is looking interesting as we see a continued high volume growth coming in this space, and the margins should also follow later on. So the growth is very interesting, and the business is expanding at a very fast pace.
Okay, all right. What we'll do is go across to Snehi. UBS had initiated coverage earlier today on Urban Company. Buy rating is what UBS has initiated at. Target price being 180 apiece, so still some upside to go despite the 8% move today. Brokerage believes India's largest online home services platform is entering its next phase of accelerated growth. Snehi here with the highlights of that note.
Absolutely. So, stock in focus today is Urban Company doing well in trade on the back of a very bullish note coming in from the house of UBS, wherein they've initiated a buy rating with a target price of 180 rupees per share, implying a 22% upside to where the stock is right now. They say that Urban Company is India's largest online home services platform with 8.4 million users. They see net transaction value growing from 43 billion in FY26 all the way up to 100 billion by FY29, implying a CAGR of 32%. They say that India's home online service market is entering its blink-it moment, and they also say that Urban Company is at the forefront of this evolution. They are also saying that company has a head start against its peers, Snabit and Prompto, because while their peers are also launching other categories, Urban Company already is an established player in all those health services and beauty services category. They say that right product market fit, strong balance sheet, and the execution track record that Urban Company has with a clear focus on unit economics is a key positive for the company. And they believe that the market is not fully appreciating India's home services growth acceleration. For InstaHelp, they expect break-even earlier than what the company has indicated, and they see home services segment growing at a 20 to 25% CAGR all the way up to FY31. They believe that Urban Company can reach its target of 10 billion rupees adjusted EBITDA by FY31, and they estimate a total addressable market, a TAM of 22.5 lakh crore rupees, with FY31 penetration levels even below 5%, which means there is a lot of legroom for Urban Company to grow ahead. So for all of these reasons, UBS has initiated a buy call on Urban Company with a target price of 180 rupees per share.
Okay, that's the take with regard to Urban Company. I wonder, Kunal, how you look at some of these names?
Yeah, I think it's now developing to be a decent chart because, the stock which was earlier languishing around the 130, 135 kind of a trading range has now moved back towards 155, 157 mark as a breakout. In the process of today's move, the stock has crossed back above the 3-month swing high. So we call this as a swing breakout on the short-term charts, which typically is considered to be positive for the stock. I would believe that now this opens up further headroom for Urban Company on the higher side, because when you see weekly, monthly charts breaking out in the back of higher volumes, that generally should augur very well for the stock. So which means that now this could be a very interesting play from a positional time frame. I think Urban Company should be looked at from the current perspective.
Okay, all right. That's with regard to Urban Company. Narendra, some of the core consumption names, I wonder how you're looking at them, and how should one play consumption at this point in time? Is auto still the theme to play consumption?
Yeah, definitely. Auto can be one of the things, especially two-wheeler space is very interesting. And in two-wheeler space, we are more positive on the stocks like Bajaj and TVS, wherein both these companies offers both the legacies as well as options into the EV, which is another high growth segment. And we expect that the incumbents should be driving the growth in the EV space as well, and would be taking the major